Hello everyone, I hope you're all well. I hope you're doing well. You're looking after your family and friends, you're looking after yourself, you're looking after your putty cats, you're being kind to your beautiful animals, your beautiful dogs, and you're just being kind to people in the world, even if they are strangers, just simply to make this place a better world. It's becoming an increasingly unfriendly world. Today I'm looking at Ripple and Ripple's valued at 10 billion and how Ripple could transfer the value of their company so quickly, just literally overnight, to the XRP holder of Ripple's technology and the holder of XRP. So Ripple could literally transfer their wealth from this 10 billion valuation to XRP holders, okay? Now, as you know, Ripple did a $200 million C round financing, and they were funded by Tetragon, SBI Holdings, and an investment firm called Route 66 with the $200 million capital raising. Now, the issue is they didn't need to do this capital raising. They don't need the money. They have a lot of money in their kit, in their piggy bank, so to speak, and they just don't need to do this capital raising. So the question I had, thinking like I always do, is why did they do this capital raising when they don't need the money? You know, they literally have about 25 billion or so in their balance sheet. And so I started thinking they probably did this capital raising to get more profile and to get more marketing and to get much more out there in the professional market, the bond market, the capital markets. So the professionals in the bond market, the capital markets, start to hear about Ripple, not just other people in the cryptocurrency market or the like. And in my mind, I feel like this is an entree for something bigger, and I believe it is something bigger. And so with this capital raising, it actually gave the market a proxy for the valuation of Ripple. Now, we can use a very simple valuation methodology, not like the other one that I've used for valuing XRP, but we can use a very simple valuation model to find out the value of Ripple, but also the value of XRP if they ever did an equity swap. And, you know, we could talk about an asset swap between cryptocurrency and equities. So the fact is, if Ripple ever went to IPO, they could easily do an asset swap, and it would be the first in this market, in any market, where an asset swap's done between cryptocurrency and equity. And that's what I believe Ripple should do. And, you know, they're a very smart company, and it's always a possibility they could do that. So if you look at the next article here, again, another article talking about Ripple's 10 billion valuation after its last funding round. And to me, this is an entree to be in the professional markets, okay, to get in front of the debt institutional players, get them aware of who Ripple are, get them aware of looking at their balance sheet, even if it is a private balance sheet and they're not publicly listed at the moment. But certainly it's an entree and a proxy for Ripple to enter other markets like the equity market with an IPO. It's free advertising, it's great marketing, and it's a terrific strategic way to go in my mind. Absolutely. So Ripple could transfer the value to XRP holders overnight, and I'll show you how they could do that, okay? As I said, they don't need the cash. They didn't need to do this bond issue. Also, the bond issue was small in terms of issues in the bond market. Generally, you know, people will do 500 mil or up to $1 billion. As I said, they didn't need the cash. It got Ripple's name out there. Absolutely. Great marketing, advertising, great strategic move. So that professionals in other markets, in bond markets or corporate bond markets or high yield markets, get to know who they are. I think it's an entree for something bigger. It's issuing in other asset classes. And using a simple valuation model, I can give you a value of XRP, not just using the discounted cash flow model where I did that with XRP about a year and a half ago and came up with $334 for one XRP. This is another valuation model. I can give you a value to XRP just on the balance sheet value of Ripple, okay? And there is a connection, of course. XRP and Ripple are connected, okay? Without RippleNet, XRP, XRP, you can trade XRP on the markets, on the exchanges, of course. It can stand alone like that, where it just trades on the markets, but there's nothing behind it. But the reality is, with RippleNet, XRP, whether it's used internally or externally, has value. If someone uses XRP internally, they save themselves 30 cents in the dollar. So it's like giving a business back 30 cents profit. And if you use XRP externally in the external markets, the exchanges, you're saving yourself 70 cents in the dollar, okay? So it's like giving you back 70 cents on your bottom line, on your profit line. That makes you very, very competitive. Now, we saw that the other day with a company who was basically competing with Western Union, in terms of FX transactions, right? Australian company, they basically could do a transaction for foreign currency and would only cost you 2% because they were using RippleNet, and their competitor, Western Union, was going to cost you 10% because they were not using RippleNet. And the bottom line is, if you're using RippleNet with XRP and you're saving the consumer 8%, that proves that XRP has value. Of course it does. Because without using XRP, you're not saving 8%. You'd be showing the same rates as Western Union to the clients, and you wouldn't have a comparative advantage. So RippleNet with XRP creates a huge comparative advantage. And with that, XRP has value. And I'll reiterate that again. XRP has value. I'm just going to have a glass of water because I'm really thirsty. Sorry about that. So even using another valuation model, rather than the discounted cash flow model that I came up with a year and a half ago, and I'm updating that model, by the way, and that will be released very soon in January, but I'm afraid you'll have to pay for the new update because I'm going to put it on FlixChimp, and I'm going to be putting it on Patreon for exclusive content only, okay? So I'm afraid you will have to pay for that because I do a lot of hard work. But so what this means is, even with this bond issue, as I said, I believe it's an entree for something bigger, and it has great implications for anyone that holds XRP. And I think anyone that holds XRP should be aware of this, okay? Basically, Ripple could easily transfer the wealth to the end XRP holder, and I'll show you exactly how. Okay, so you just got to bear with me on this exclusive content on Patreon. I've got to give myself a bit of a plug here, and FlixChimp. I know people don't like that, but a girl's got to get paid somehow. Okay, so there's many different types of valuation models in the equity market. Okay, there's discounted cash flow model, which is an absolute valuation model. There's a dividend discount model, which is also an absolute valuation model. And there's relative valuation models like, for example, price earnings yields, dividend yields, market cap values, and book value, which, look at equities in a similar industry or a similar sector and basically compare them if they're basically, doing, say, IT, for example, with software like Ripple is. So therefore, we will compare them with IT and software type companies. Now, I won't go into the pros and cons of valuation models. They all have their flaws. All of them, and we need to be aware of those flaws. But the valuation model I'm going to use today is book value, because we actually have an external valuation for Ripple of 10 bill with that bond issue, okay, with their bond issue. So this is the model I'm going to use today, not the discounted cash flow model, which I'll be releasing the new update of XRP's valuation, and I can tell you it is higher than the previous one. But today I'll be giving you a valuation of XRP using the book value, okay? Using the book value of Ripple, which is, we know externally is 10 billion. Now, as I said, valuation models do have flaws, okay, and pros and cons. So Ripple has value and so does XRP. And people that tell you it doesn't, again, are talking FUD. It makes sense if you think about it. XRP saves people 75 cents in the dollar when they use XRP. Of course the thing has value. Okay? Of course it does. It's just common sense, okay? Particularly when anyone says it's not, it's just common sense. You're using something to save yourself 75 cents, which is going to go back onto your profit line. Of course, it's just common sense. It has value. Okay, so let's talk about book value. What does book value mean? Okay, now book value basically is the equity of the company, and it equals total assets minus total liabilities, which is book value. And that becomes the equity of the company, okay? So say, for example, we've got XYZ. They have 100 million in total assets and total liabilities of 80, so 100 minus 80 mil. Their book value is now 20. Now, we can do this with Ripple as well. We know the total asset value of Ripple is valued at 10 bill. We know they've only got 200 mil of liabilities, the debt issue that they issued, and so therefore their equity component is 9.8 bill. You see what I'm saying? Just a very easy valuation model, book value. Again, book value has a lot of problems with it. It's not mark-to-market value. It doesn't look at future cash flows. It doesn't look at depreciation, all those sort of things, but we won't go into that. This is just a very, very basic valuation model, and you just need to know the pros and cons of it. So essentially, looking at Ripple, 10 billion minus the 200 million, which is the total liabilities, the corporate debt, because they're borrowing market from the debt markets. Their book value or their equity is 9.8 million. Okay, so if we look at, say, Microsoft's balance sheet for September 2019, and we get this off Coifin, 278 billion is their assets, their total liabilities 172 bill, and their book value is 106 bill. This is the same figure reported as their equity, just so you know that it's consistent, right? So if we look at the book value of that company and we take off the liabilities, so we come up with the equity, and we look at the asset ratio to debt, 278 bill over 172 bill is 1.613%, right? So for every asset Microsoft have 1.613, they have $1 of debt. So put it another way, for every $1.613 of assets, Microsoft have $1 of debt. Okay, now we could even use this model for Ripple. We could say that Ripple will borrow from the debt markets $1 of debt. We could say Ripple borrow from the debt markets, 61 cents of debt for $1 of assets. Okay, now you get my drift here. So if Ripple is borrowing 61.99 of debt, their total liabilities would be 6.19 billion. Total assets would be 10, and the rest would be equity, the difference being 3.8 or something. Now, Ripple don't have to borrow all the money from the debt markets. They can borrow all the money from the equity markets, depending on which course of funding is cheaper. For the equity markets, you've got to pay a price, and for the debt markets, you've got to pay a price. So whichever funding for them is cheaper, that's the way they will go, right? So we could assume that Ripple could take the same ratios as MSFT and basically say, right, we're going to borrow 6.199 from the debt market and we'll borrow 3.88 from the equity market. Or alternatively, they could say, no, we're just going to borrow all that money from the equity market and we're going to do an asset swap with XRP, okay? So if we just look at this crude calculation, and I just want you to come with me on this and understand my drift here, my thoughts. If we said they were going to go and just use their 3.8 and do an IPO, and the rest they were going to borrow from the debt markets, then the value of the value of Ripple shares, and they did $1 billion, would be 3.88 per share, right? The value, if they did 2 billion, would be 1.94 per share, or if they did 3 billion, it'd be 1.293667. Now, their shares are valuable, and the reason why is because their technology makes their shares valuable, and also XRP. Because the technology with XRP together gives people, corporates, banks, customers, anyone, a comparative advantage of saving 35 cents in the dollar or 75 cents in the dollar if you use XRP, which can be used internally and externally, it gives people a comparative advantage. Now, even if a company doesn't use XRP themselves because they don't buy XRP on the external market, Ripple Net will still use XRP on behalf of the company. And that's what people are missing here, completely missing. When a company does a currency trade and they're using RippleNet and they don't necessarily buy XRP on the open exchanges like we do, RippleNet will still be using XRP in the internal system of RippleNet on behalf of the company. The company has no exposure to RippleNet. Ripple do, right? The company has no exposure to XRP. RippleNet do. Let me say that again. A company doesn't use XRP themselves because they don't buy XRP on the open market, but they want RippleNet to transfer Mexican peso to Canadian dollars, right? But they don't buy, the company doesn't buy XRP. But the point of the matter is Ripple and RippleNet buy the XRP internally within the system, and that's what a lot of people don't understand, to make this transaction on behalf of the company. But the company doesn't have exposure to XRP. You understand what I'm saying? Ripple do, okay? And people need to understand that. There's two ways XRP can be transacted, internally to RippleNet or externally to the exchanges or over the counter to the exchanges. All right, so let's just go and look at what technology companies are here so we can compare Ripple to the technology companies. Now, in this example, I've used Google, Facebook, MSFT, Amazon, and a few others, right? And Apple. Because what I want to show you is if Ripple were going to do an initial public offering, right? How much would they issue in shares? And if we know how much they're going to issue in shares, we can value Ripple's shares, right? Once we do that, Ripple could easily make an asset swap between XRP and Ripple's shares. Now, this has been done in other markets, okay? In other types of assets, in the professional market. And this is called an asset swap between two different markets, okay? And you can do it, and I'm amazed that the investment bankers aren't telling Ripple to do this, right? And they should be, as far as I'm concerned. And what they call it is transferability or fungibility, okay? Where you can actually transfer one asset to another. It's called fungibility in markets. It happens. It's real. I've done lots of them. All right. So if we go back and we go, right, looking at, the companies that Ripple, we compare them to in the sector, like a relative sector, and the companies that are sort of in their sector, and because Ripple's a tech company, but it's also a software company. So we look at Google. They issued 680 million shares. They have on issue. MSF has 7.55 bill. Apple 4.45 bill. Amazon 497.4. Facebook 2.85. IBM 886.02. So we have the low of 0.497 bill and the maximum 7.5. Just bear with me on this. You might need to watch this video again to understand this. But if Ripple decide we're going to now do an IPO, initial public offering in the equity market, and we're going to have a story of fungibility between XRP and Ripple's shares, Ripple could easily buy back 25 billion of XRP shares easily, and basically have that converted to equity. So they could do a share issue very easily with 9.8 billion, very easily, and to buy XRP off the XRP holders at 19 cents or 20 cents, because it's very, very cheap, it would only cost them 4.75 bill, okay, out of their 9.8 billion if they did all their issue through the equity market rather than the bond market. And the reason why it's 9.8 is because they've already done 200 mil, right? 200 mil debt, and their total asset position is 10 bill, as we know, as it's been valued by professional market makers. So if we decide, right, their book value, total assets minus total liabilities, 10 billion less 0.2, 200 mil is 9.8. They can effectively, if they want to, issue 9.8 billion worth of equity into the markets. You know, they don't want to borrow money, they want to issue equity. So the equity is worth 9.8 billion. So if Ripple did a share issue with an initial public offering and they did 1 billion or 2 billion or 3 billion, it's very easy to work out how much the equity is worth, right? 9.8 billion, they're going to do $1 billion in shares. 9.8 over $1 billion is $9.80 per share. 2 billion is $4.90 per share. 3 billion is $3.26 per share, right? You get my drift, okay? Now, and then what they're going to do, they get 9.8 billion in, and they can do an asset swap between XRP and their initial public offering, thus transferring wealth to the XRP holders and eliminating 25 billion of XRP in the market, so that the total supply of XRP reduces, the total circulating supply of XRP reduces. Because 25 billion reduces, XRP goes up, and also Ripple have more holders in their shares, which is what every company wants to do. They want to have many diversifiers, many people holding their shares, so they have diversification, okay? Absolute diversification. So what we have is an asset swap, okay, where Ripple buy 25 billion of XRP, say at market, 19 cents, wherever it is. It costs them 4.750 bill, and they do an asset swap for every one Ripple share. They give the XRP holder, for every 25 of XRP, they give the XRP one Ripple share. Okay, so effectively Ripple buy back 25 billion at 4.75 bill, and for every 25 XRP you have as a holder, you get one share of Ripple. Okay, and this 25 billion, they can actually burn. They bought it back out of their equity funding, their equity money that they got from the IPO, from the initial public offer in the equity market, and they can effectively burn 25 billion or even have it as their own asset. But either way, Ripple can buy XRP like anyone else, okay? And they can do what they like with that 25 bill. It doesn't have to see the light of day ever again, okay? So what they can do is give to existing XRP holders access to Ripple equity with a strict criteria. For example, you must have held XRP for a year. There'll be a strict criteria for the cutoff date or when the equity book is building, and there'll be a strict cutoff criteria for XRP holders to participate in equity. So at the end, the equity share is worth $9.80 versus 19 cents XRP price by 25 XRP units. So the gain to the individual XRP holder, and this is how Ripple transfers wealth to the XRP holder, the gain is basically $5.05 for one share against 25 XRP. And the way we get that is basically $9.80 is the price of the share with $1 billion on issue, by 19 by 25 XRP less that. So $9.80 less $4.75 is $5.05. So in this asset swap, even when we look at an asset swap between markets, it proves that XRP has value. Okay? Because you can't have one market showing an incredible value like the shares of Ripple and not another market where they've issued cryptocurrency into the cryptocurrency market, XRP into the cryptocurrency market, okay? And it's just another product. It's another funding product. And that's what I'm getting at, right? When a company issues, for example, and I know, look, cryptocurrency is different from the technology and all this sort of thing, but the reality is, if you do an ICO into the cryptocurrency market, you're actually getting money out of the investor. And that's a funding tool, okay? People are forgetting also it's a funding tool. So a company or whoever it is, or a project, is getting money from the investor. When you issue into the debt market, corporate paper, you're actually getting money out of the market as a funding tool as well. When you issue equity into the equity market, you're actually getting money out of the market as a funding tool. So yes, XRP has other utility, but it's also a funding tool. In other words, corporates or whoever it is did an ICO or an IPO or a new debt mandate, and they got money out of the market, and they have money sitting in their balance sheet, right? So yes, cryptocurrency is also a funding tool. And the point is, you can't have one market being really cheap and another market being really expensive. You know, Ripple's debt will price fairly similarly to its equity in terms of a rate of return, and so should its XRP. And this proves XRP has value, okay? So, and this is what we call an asset swap. Buy XRP and sell equity. Okay, at the moment, Ripple's equity is private equity. It's not public equity. Private equity means it's not listed on the stock exchange, but once it lists on the stock exchange with its initial public placement, then Ripple becomes secondary once those shares start trading on the stock exchange. And being a tech company, their shares will trade extremely high, okay? Not just at $9.80. So the outcome of this is Ripple burns $25 billion. They purchased off market or over the counter or from the individual XRP holder, however way the XRP holder wants to sell it to Ripple. It reduces the circulating supply of Ripple, $25 billion. Reduces the total supply by $25 billion. XRP will go up because of this. XRP holders, which there are a lot of them, will also hold Ripple shares. Ripple get diversity in their shareholdings, which is great because you don't want big holders, big mammoth fund manager holders holding Ripple shares who can actually sell down the shares and influence the share price. You want a lot, as a corporate, you want a lot of small shareholders, lots and lots and lots. You don't want big people holding like billions of it so you affect the share price, right? Ripple, with an IPO, they'll get more investors. They'll also bring more underlying support to XRP because it's transferable, exchangeable, and fungible, okay, to equities. Now, what transferable means fungible? Being something such as money or commodity of such a nature that one part or quantity may be replaced by another equal part or quantity in paying in debt or settling the account. So it could be something else, right? It could be one asset for another, but it's fungible, and it might have different ratios like we've seen. 1 unit of equity equals 25 of XRP, okay? And that's what fungible is, right? And this is a great marketing story. It's for them, so all we have is Ripple's balance sheet becomes book value equals 9.8 billion of equity equals total assets of 10 billion minus total liabilities of 200 million that they issued as a bond debt issue. And so they get an overall reduction in XRP of 25 billion. XRP goes up because of that. There's more holders of XRP and Ripple shares, much more diversity. Great promo. It's all good for everyone. Plus, no one has converted crypto to equity. It's the first time for an asset swap with crypto and equity. And it pretty much puts Ripple on the map. And it's a great strategy. Absolutely great strategy. So, I think it's all good, basically. Anyway, guys, thank you very much for listening. I hope you're all well. Look after yourselves. And if you've got any questions, please do come back to me. Thank you.